Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is we're going to pull this up in a second. That's the daily of the cash market, but we're actually going to look at our intraday dynamics. This is the mini S&P 500 futures contract, front month in nature. That is next March, as we just rolled over out of the December contract. So we're now trading March of 10. And looking at the last print of 1101.25 as we continue to chop around this range now that's been ongoing for about 5 to 6 weeks. Generally, ranges reach very long in the tooth around the 6th week, so we're definitely looking for a breakout of this quilling formation. But as you can see, it's been quite choppy of late. We've just got some mixed indications going back. This is, of course, Friday, the 11th of December, and we're looking back at Thursday, Wednesday, Tuesday, and Monday. As you can see, Monday had some strong bearish indications right here in this indicator. Actually slid down. We can actually pull over just a little bit. Had a bull trap open, actually eclipsed the high of the late session of the prior day, which was Friday. But as you can see, not only bearishness here, full bearishness here, but it's certainly a very impressive negative divergence right there. We love our divergences, and actually sliding into the bearish territory, essentially in quadruple threat bias right there. At 11:02, we did make a surge back to the upside. The bulls tried to make it one more time, bouncing off the trend, but just weren't able to see what was coming, the writing on the wall, and actually did get the break. Very nice move lower. Actually continued on into Tuesday, but as you can see, oh, look at this, accelerating bearishness on Tuesday, suggesting yes, we do get a close near the low of the day, which actually did happen. Beautiful retest of the underside of the trend right here. Nice short setups right there. Have a bit of a divergence there, but actually not only a quadruple threat and underlying, but certainly bearish trend, bearish price technicals. So definitely all bear was the case on that day. Moving on, we did see an actual divergence here, suggesting the market would go higher, and actually it did. We had a divergence here. We actually had bullish there. Actually had quadruple bullishness right here as we broke above the trend. Again, the bears this time didn't see the writing on the wall. They tried to retest the low as the bulls did the high and blasted to the upside. That followed with Thursday's trade. We got a lot to cover, so we're just going to speed it up. Followed Thursday's trade. Bullishness there, confirming the bull gap. We did have some little bit of bearishness there, and actually had more bearishness right here, and that of course led to the mixed indications, led to essentially a flatlining day. What do we have here today on this Friday? Full bearishness here, but a little bit of bullishness there, bullishness here. So again, just a continued choppiness, choppy environment for the market as we bounce around this range. We're going to look at the cash market right here. This is the S&P 500 cash market. 1106.28 is the last. We do remain bullish after having gone bullish at 961, essentially over 960 in the cash market. These are our official market timing biases, and we're looking at in terms of momentum, short-term bearish, intermediate term bullish but gray status, short-term bullish but gray status in terms of directional movement, intermediate term neutral. So really just chopping around. As you can see, price shows you everything you need to know right there. Just a box from 1085 up to the 15 level, 1115.81. So we'll call it around 11:15. So just really boxing out. What's happening though is the trend is certainly bumping up against this resistance. Are we going to break above this high? It just doesn't seem like it's going to happen. It could, but it doesn't seem like it's going to happen. The only reason is that the dollar, which has really been a lot of a huge influence on the market and all its trials and tribulations of late, as you can see. We'll just turn this on. As you can see, the dollar is actually breaking higher. That means lower stock prices. So the dollar is actually breaking out. The market just hasn't realized it yet. As you can see right there, the dollar continues to fall. The market continued to rise. The dollar rose right here. The market fell markedly along with the rise. Then the dollar started to fall again. The market rose. Really has just been topping out on the market. The market price technicals are suggesting strong bearish resistance, but now we have a break of the dollar, and as you can see, not only we have a new high actually breaking out of this ascending wedge right here, and the market has yet to roll over. So definitely looks like the bears are going to take control, but really we remain officially bullish until we see that, until we see this break below the 1080 level in the cash. It certainly looks like we are going to remain bullish, but certainly below 1080 we'll be back to neutral and likely bearish below 1080. So we're probably going to move to bearish on an official basis. Having said that, looking at what we mentioned the other day, just got a buy signal. Now this system, we went ahead and programmed it. We haven't actually used this methodology in a few years, but went ahead and programmed it. As you can see over the last year, wow, it's been very impressive. As we mentioned, from a contrarian's perspective, you buy the highs in fear and you sell the lows in greed. And 18,000 trading just one contract over the last year, just $600 drawdown. That's just ridiculous. Just beautiful trades. Having said that, from '07 up to this point, didn't perform that well, actually. But we do have a buy signal now, and we're just running out of time, so we're going to speed things up here. As you can see, from '07, right around mid '07, the VIX just started to skyrocket, and there was this anomalous breakdown. But as you can see, it's right back to its money-making ways over the last year. Certainly has been impressive. We do have another buy signal right there, but we'll see where that goes. Just wanted to make mention of that. A couple other things we're going to look at is we've made rarely, if ever, do we tweak our systems, but we have had a nice, impressively strong drawdown of late, and as you can see, we've made some small modifications to a lot of our systems actually. So there's a couple of examples. We're going to look at that in a second. Here's the grind going from. Essentially, we've reduced the trade exposure, the risk exposure, so you have less commissions, you have less potential for negative slippage. We went from $80 average trade net profit to the newer version to almost $100 average trade net profit right there. Actually, so we're going to go ahead and minimize this. As an aside, we also went ahead and developed some newer strategies based on our intraday dynamics. It's more of a discretionary play right there, but as you can see, the newer strategies, this is a day trader 22.0, and very impressive, $156 average trade net profit. So every time you put on a trade, you're going to make $156. And day trader 22.0, very impressive, $98 right there for 21.0. And $2,100 drawdown is the max there. But we're going to go ahead and shoot over to another example of reducing trades. So here's the old version of the Dow Day Trader 1.0. 166 trades, $45 is what you can expect to make every time you trade. 166 trades. Now with the next iteration, if you will, $80 is what you're going to expect to make, and the trades have dropped over 100. So you've dropped well, about in half. So again, that's reducing your commission, that's reducing your potential for negative slippage, and you're making essentially the same amount of money. Still being strong is the Evo. As you can see, very impressive, $176 average trade net profit, and the Evo ER, this is actually the Russell right here, $211. But of course, these have greater risk, but every time you make a trade, it's going to be impressive. So we're going to go ahead and look at, here's the ESD Trader 1.0, half of the dual day trader. And as you can see, the average trade net profit has gone to $100, up 100% from the former $50. Also, the max drawdown has been decreased to just $1,800 over the last year, down $1,300 or 41%. And of course, there's 103 less trades. As you can see, they're making essentially the same amount of money, $8,200, $9,000 for the older version, 185 trades down to 82. And we're just going to speed things along here. Here's the drawdown we've had in the black. Look at this beautiful, this is recent, this is from '07, December the 7th actually. Beautiful retest of the channel and the trend. Definitely a great opportunity to get involved with any of the portfolios. We're also going to look at the master trading room, up 7,500 the other day, 4,600 the next day, 4,800 yesterday, and that's going to do it for us. If you guys have any questions, go to the website, chat with the support team live, shoot us an email to admin@MiniAnalyst.com, and we'll see you next week.